Most people will go find an accountant because they have to do the accounting. You don't have to do financial planning because no one is coming to knock on your door saying, "Hey, you don't have your insurance. We're gonna shut you down. You haven't started investing. We're gonna shut you down. You haven't planned for your kids' education. We're gonna shut you down or pay." So that's why some people just kind of leave that on the back burner, and then it stays on the back burner until it's a little bit too late.
Welcome to the Super Clinic Project Podcast, where we take regular clinic owners and turn them into cash-based multimillionaire entrepreneurs. Warning, if you're a doctor who listens to this podcast regularly, you will make millions of dollars. Do not listen to this podcast unless you want to be a successful clinic owner who helps thousands of patients achieve their health goals and adds more money than you can imagine to your bank account. You've been warned.
Welcome to the Super Clinic Project Podcast, where we take regular clinic owners and we turn them into super clinic owners. So today is me, your host, Jennifer Gligoric, and I'm here with someone that you're just going to absolutely love. They are a chartered financial planner with international investment experience, and they help business owners and wealth creators make confident decisions that align with their goals. He's also the author of 7 Basic Wealth Strategies for a More Rewarding and Fulfilling Life, and the host of Elevate Your Wealth podcast. So let's give a big Super Clinic welcome to Victor Idoko. Welcome, Victor.
Thank you for having me on the show, Jennifer. I am thrilled to be here and share with your audience who are super.
Yes, they are. They're super clinic owners. Well, but because you're international, you see business from a lot of people, not just Australia, where you're based, but also around the world. So I want to dig in. Well, first, tell us how you got to where you're at right now. And then I want to find out what you think is going to be happening in the future, because I'm very interested in that. We are very fast paced. Right now with what's going on. So I'm just curious to dig in with you with that. But, talk about yourself. Tell us how you got here.
Yes, thank you. So basically, I started studying about 16 years ago. And back then, I remember my parents telling me I should be a doctor. I was like, oh, no, I don't want to be a doctor. It's going to take too long. And I was like, no, I want to do the shortest course ever. And, just get out of uni. So I decided to study finance business, which in Australia is about 3 years course. Little did I know that 17 years later, I'll still be studying. So, I wish I ended up being a doctor. However, one thing I've learned from my journey so far is we're all kind of business owners, and we all need to learn and know about business as we go through running a business or being a true professional. So a bit about me. Look, I love chess. I love reading. I love fitness, heavily into that. When I get time as well, I love spending time with family and friends.
That's good. Well, I'm glad to have you here because you have put out so much that's been so valuable. And by the way, for all of our guests, he's going to be giving away some great giveaways. And so I'll be very excited to share that with you because you're going to get so much out of them. But one of the first things I want to talk about is why you decide to write your book, The 7 Basic Wealth Strategies. So who is it really for? And talk about that a little bit.
Yeah, amazing. Jeremy, well, basically, I decided to write a book because I've read lots of finance books, be it academic books and, books written by other people for just the general public. And one thing I found is they always give a little part of the picture that they don't really give the whole thing. And, that really stems from the way they understand it versus the way it actually works. And I was thinking a few years ago, I was like, well, finance people need to write more finance books because, for example, I sit down with lots of clients, so we understand all the dynamics. And when I say dynamics, I mean from just tax to, estate planning to setting up structures so you can save and protect wealth, to investing and to protecting, to having some insurance as well. So all those really come together to give you, the best wealth building structure and process. So when I sat down and read books that maybe just talked about tax or just talked about investment or just talked about one aspect, I was like, well, something really needs to be out there that talks about everything. So it was from that I decided to write the 7 Basic Wealth Strategies. And just as the name implies, it's just basic things that people need to know. So this is what everyone needs to know, because the 7 basic things you should be doing in your life to ensure that your wealth and your finances are, top notch. That was why I wrote it, and I'm looking forward to improving it and actually writing other books. I actually really enjoyed writing the process of writing and publishing. So which was good.
It is good because, it's, you never know, there is so much for wealth building and wealth strategies. And a lot of business owners, when they get into business, if they're really scrappy entrepreneurs, it's not because they came from tons of wealth to begin with. Maybe they came from families that, they were paycheck to paycheck. There was no such thing in their mindset as wealth building. However, it really doesn't matter. I think that's one thing that we can talk about too, is the mindset of wealth, that it doesn't matter even if you are paycheck per paycheck. There are ways that you can build wealth to at least give your kids a little bit more of a leg up than you, right? And mostly we deal with doctors, so they're already doing pretty well, but even so, it's a struggle right now. Healthcare, insurance, everything that's been going on, it's not, a guaranteed you're going to be very wealthy just because you're a doctor. There's some mindsets you have to have and things that you need to think about and start putting in place. What do you feel is one of the greatest mindset shifts someone needs to go through to get from, making it and just savings or actual wealth building?
Yeah, so very, very good point. The second chapter of my book, we talk about biases. Everyone has a certain bias, and these are just blind spots that you may or may not know about. And, one of them that I'll just quickly mention, which relates to that, is herd mentality. So just following the herd and doing whatever else everyone is doing. When we sit down with business owners and, just people trying to grow wealth, and yes, we have some medical practitioners who we advise. So everyone needs a certain aspect or a certain bias dealt with. Okay, so everyone is different in that regard, because, for example, I might have herd mentality, another person might have mental accounting, which is different type of bias. So first of all, it's kind of understanding those biases. But the other thing that generally I always tell people that many people don't do enough work on, and everyone should, regardless of how much you earn, is your cash flow, your spending plan. If you spend more than you earn, you will not build wealth. There's just no question about that. If you can be earning $5 million, and if you're spending $6 million, you're going to be in trouble, with your wealth building. So the key thing I always tell people to focus on, and this is the third chapter of the book, is cash flow. What is coming in, what is going out, and you need to understand and you need to know that off the top of your head every time. As a business owner, you should know what are the 1, 2, 3 things that are the most expensive things for you, and how are you working towards reducing them so you can keep more as a business. And that actually flows down to your personal wealth as well, so your cash flow. So I always tell everyone, it's not about how much you earn, but definitely about how you manage what you earn, because you can overspend. Everyone can.
So when someone's starting to get serious about their finances and they realize, okay, I need to have more of a plan, what's one of the first things that you feel that they should do?
Yeah, so one of the first things I'll say they should do is sit down and go through your account and understand what you're spending. If you're in a situation where, as a business owner, you've built and you have a big practice where you then have a practice manager, or say a finance manager in the team, they should do that for you and come back and report to you. But if you don't, you need to do that yourself. So you need to go through your statement, see what you're spending, see what you can cut down. There might be $100 subscription that is there that you don't use, you cut it. You just don't need it. So all those things really, really matter, because you end up, going back to the subscription, you end up cutting, 5, 10 of those. All of a sudden you've saved $1,000. And I know it might not sound much to lots of people, but it can add up over time. Okay. So one thing I'll say they should do is sit down and go through your statements. What are you spending and why are you spending? Can you do without that? I said, it's not about how much you earn, but how much you spend, and you need to spend below what you earn.
Yeah, I think for our clinic owners, a lot of things that are overlooked with this. And I know this is a topic, because some of them are like, I need all of it. I need electricity, I need that. But when is the last time you went through your actual contracts? I just did that. I had a decent enough contract, at least I thought it was. And here in my state where I live in Texas, we have a place you can go to where you can really compare all electricity plans. And I had to literally learn about that because the rate isn't always the rate. There's all these fees that go along with the rate, plus they're basically passed through. They're illegal taxes is what they are. But, that's the way it is now. They call them fees, but basically they're tax that these energy companies get and they pass it through to you. They're not supposed to, but they do. And when you look at that and then doing it, I realized that while my rate had been good when I got it 2 years ago, it was no longer the best rate. And so now I can do that. Now, this is just at a small level, but when you're thinking of it and for your office and all the extra things you pay, your financing you're paying on equipment, sometimes it is better to get new equipment to get out of that if you can negotiate other leases. So people will not even renegotiate their loans. There are people that have taken large, car loans or leases and things like that, and they won't go back and renegotiate it. And those are things that you still get to keep it. It's not we're telling you to live in scarcity mindset or anything like that. It's just be smarter with the money that you're already spending. Would you agree that looking over contracts and different things like that and seeing if you can negotiate your rates? I mean, when you're talking about corporate level, there's tons of contracts like that.
Yes, 100%. You definitely want to go through your contracts regularly. And, as a business owner, sometimes you might be thinking, as a practitioner, as a medical practitioner, you might be thinking, I need to spend time with my clients. I need to focus on that. It's like, well, you do it yourself or you get someone to help you do it. Part of that is choosing which one is best. Either getting someone or doing it yourself, but it has to be done. So, but yes, I do agree. You definitely need to review your contracts and ensure you are not leaving. You're not giving funds to people who you don't need to give funds to. You want to save that and you want to put it into the business pocket, into your pocket. Just mentioning that as well. Another thing as well might be underutilizing whatever contracts or whatever benefits you get. Office space might be an example. If there's a room there that you're not using and you just walk past every time, it's like, oh, I need to do something about it. Or you definitely need to find a way to utilize that. It might be subletting. It might be, maybe changing to a different location if that works. I know that can be hard sometimes, but the main thing is you need to really utilize all the resources you have and not leave anything unattended, because there is an opportunity cost for all those if you don't attend or if you don't review contracts, if you don't utilize all the space you have, if you don't utilize all the team members you have as well.
Oh, yeah. Utilizing your team members to do what they need to do and having them be accountable and holding them accountable to numbers is really important. Even if at the front desk, there's a conversion rate. How many people at the front desk should be professional schedulers? And so one of the things that the front desk at any clinic, because it's going to be one of your biggest money losers if you don't do it properly, is making sure that they are held accountable to a certain conversion rate from getting people scheduled into appointments. Their job is to get as many people in there that can be helped as possible and to overcoming those objections. And you should know what their percentage rate is when they have, a new lead or a new person that calls for the first time. What's their rate of actually getting them in to schedule an appointment? And then what is the rate of that person actually showing? That alone, just working on those little numbers can be huge income increases,
Yes.
into a business for that.
Yeah, for sure.
When you do financial planning, have you ever there is some risk in financial planning as well. Can you talk about how to take the mindset between unacceptable, like what would you say is unacceptable risk versus acceptable risk when you're talking about financial planning?
Yeah, very good question. I think the thing with financial planning is there's some universal principles. What that means is the principles that apply to anywhere you are, irrespective of what life stage you are at. And one of the ones that people really need to understand is the one of diversification. Okay, so you're looking to build wealth, looking to build some passive wealth, invest, and you're looking to invest, you need to diversify. Okay, that in itself really reduces the risk of, choosing a company that doesn't do well because you didn't diversify. It's not the classic saying of not putting all your eggs into one basket. That is what it is. So that's a universal principle. Wherever you are, you don't put all your money into the one investment. You want to spread the risk to ensure that you come up with a very suitable outcome. So in terms of other, will I say, universal principles as well, I've kind of mentioned the other one, which is don't spend more than you earn. And other financial planning, will I say, principle as well, is definitely have the right protection in place, because there's certain types of risks that are out of your control. Okay, I always tell my business owners, and medical practitioners, you get up and then you would help your clients. It's part of your DNA. You just do that. But if you're unwell yourself, or if there is an event where, touch wood, or hopefully not, you pass away or you're well, you cannot stop that. So that is a risk that you cannot take. So you need to be protected for things like that. So that's on the personal side. Other things like business insurances, protecting property and equipment, all that is very important as well. So those are risks that you should mitigate as a business owner. And it's a universal principle as well, where you need to ensure you have the right protection insurances in place. And the other one I'll just add on as well is you need to have the right structures, especially when you're in the Western world, okay? If you don't have the right structures, you're going to pay more taxes, or you're going to pay a lot more fees than you have to, okay? So that's where the right structures like family trust, LLCs and all that really come into play. So you can reduce what you have. So you can reduce the taxes you pay, and you also take advantage of things like donations and charitable givings as well, So, but you can do that with the right structures and having the right professionals in place, because there's certain things that you as the business owner and practitioner should focus on. And I think it's educating yourself, or rather ensuring that you have top-notch knowledge in the service you're offering. But I don't expect you to go learn about, okay, what are the tax codes, what are the financial planning codes, and how do I be a good business consultant? You can employ people to help you, because that way you get a lot more done.
Yeah. I was just talking to someone who came on the show about a type of universal life policy. And it's basically insurance universal life. Is that what it's called? IUL? I probably am saying it wrong, but you can use this and borrow against it in a certain way that it's almost used like a line of credit. But at the end, let's say your monthly expenses are for the business are like $200,000 a month. At the end of a couple of years, you would have, by just using that and taking that to pay bills, putting it back in there, what you're using, by the time you're done with what it's accrued, because you're getting more out of that you would have gotten out of a savings account, you can have upwards of $2.4 million. Yeah. So literally, you're not spending any more on it. You're just using it for your bills, but it's a different type of account to put in and out your bills on. And there are all these financial vehicles that are out there for business owners that if you know about them, then the way you're doing business now, just using your checking account for something that you're making no money on, just makes no sense whatsoever. Or not being able to budget out things for the children, or doing these things ahead of time where you can avoid a whole mess of taxes if anything happens. Why do you think people are afraid of, why they don't go to a financial planner? Like, you'd think that would be kind of like a duh. Everybody needs a good financial planner in the corner. But yeah. I can tell you, working with a lot of business owners, they get a bookkeeper, someone who does their books. They'll call them their accountant, but they're not even really an accountant. They're really just a bookkeeper that will do their taxes, and they leave so much. They pay way too much in taxes. So what do you think the fear is, or the limiting belief maybe, of why they don't go to financial accounting? Yeah,
so a couple of things that I could potentially write another book on this one, but one of it is not understanding the cost. I think most people actually think you pay more for financial advice than you actually do. I get that a lot. where by the time they understand the structure of the fee and they understand the benefit of what you're getting, because we can really help them understand what the benefit. You're like, oh, makes sense. It's a aha moment for them. So one is the cost. The other one as well is for financial planning. And I always tell people, you want to, because financial planning is very relational. It's a relationship. In other words, you want to find one you're comfortable with. Okay, you want to find one where you like the way they talk to you. You like the way they kind of listen to what you want done in your life, and you're very comfortable just being open with them. So that's another thing that I'll say may hold some people back. You might sit down with one, you don't really like them, and you're like, no, I'm not dealing with any financial plans. No, it's like, well, you need to keep looking until you find the one you're just comfortable with. Okay, because it's a huge difference when even us for financial plans, where we find a client that, okay, both of us, yep, we just get ourselves, we're very comfortable. Like last time a client called me and he was just talking about random stuff, nothing that had to do with financial planning. But that's what you get with your business owners. They just understand that, okay, well, to go into something, they might want to bounce an idea off you. So you need to find someone you're comfortable with, that you can pick up the phone every time. So that's I'll say another key thing that people don't really consider when finding a financial planner. And I'll say the other thing as well is generally some things are, I'll say, mandatory and have to be done. And I'm going to relate this to accounting. You need to do your accounting because the tax man will come after you if you don't do your accounting. They'll literally come knocking on your door saying, hey, you haven't done your accounting for this year. We need to know how much taxes you have to pay. So most people will go find an accountant because they have to do the accounting. You don't have to do financial planning because no one is coming to knock on your door saying, hey, you don't have your insurance. We're gonna shut you down. You haven't started investing. We're gonna shut you down. You haven't planned for your kids' education. We're gonna shut you down or pay. So that's why some people just kind of leave that on the back burner, and then it stays on the back burner until it's a little bit too late. So those are the 3 key things that I just find deter people from getting advice. Same with your health. Some people, they might have a headache 1 or 2 days, like, yeah, no worries. But by the time that headache is, bad enough and they can't actually function, you're going to go to the hospital, you're going to go see a doctor.
And by that time, it's going to cost them much more and it's going to be a worse problem.
Correct.
You should go not that you want to go in every single little thing, but if it's bad, there are too many people that will literally just go to the doctor and you're like, why haven't you been here? Like, you should have been here months ago. Like, why have you put up with this for so long?
Yeah.
I was just hoping it would go away. Right. I was just hoping this problem or something would magically occur. I've had that same thinking too. I just thought it would just, get better, but it never helps. It never works out like that.
Yeah. So, and that is exactly why people don't come to financial planning. They're like, oh, it's going to go away. Oh, I'll make my money or whatever. But it's like, well, you need the tools, you need the expertise to guide you to actually get into where you want to get to in life.
You said something goes before it's too late. I get a lot of people, by the time they realize they need it, then what their limiting belief is, well, it's too late. But it can't be just too late for anyone, unless you're on your deathbed, right? So are there ways to help people, even if it is, or they're telling themselves it's too late? I should have done this 30 years ago and now it's too late. Really, at any time, you can put things in place, right?
Yeah, very, very good question as well. I think the thing there for too late, for like the catastrophic things, think about a business, a medical professional that runs a business and they have lots of debt. They have lots of debt in the business, in their personal name. If they were to pass away, it's too late. Okay.
Yeah.
To do anything, because now the family is going to suffer. Now the business might have to shut down. If they have business partners as well, they might have to go start another business. So in that situation, it's too late. The one time where I'll get people to get rid of that bias, and I'm going to call it bias that is too late, is when we're talking about time. So because you haven't done it last year, because you haven't done it 5 years ago, because you haven't done it 10 years ago, is not too late. Okay. But you're certain situations where, it's just too late. Like, for someone that has sold the business, it's too late to get good business financial planning so you can grow the business and how to sell. It's too late for that.
Right.
late for other things. So in few aspects, it can be too late for things that are catastrophic or past. But if it's just the time saying, oh, I should have done this 5 years ago, definitely not too late. You want to jump in, you want to go in and get something done.
Yeah, because you had said you had a fitness mindset too. And so even with fitness, it's never too late, right? Like, I mean, as long as you can get moving at something, then it's time to get moving, right?
Yeah. Yeah. So, and one thing I relate this to fitness because hopefully if that would resonate with lots of people. With fitness, if you've never run a mile before, you can't just get up and say, yep, I'm going to run a mile now in 6 minutes and I'm going to do it today. You're going to struggle. So what you need to do, and this relates to finance as well, you want to take baby steps. You've never run a mile before, you've never done before. How about saying, okay, well, I'll try my best to just finish one. I don't care about the time. That's a baby step. Or I will run, half a mile for the next 5 days and then push towards. So you got to gradually build towards things and not go from, I like saying 0 to hero. I think I used that phrase in my book as well. You cannot go from 0 to hero. You're either going to get disappointed or in the fitness level get hurt, or even on an investment level, make bad investment decisions because you're going to go from your $1,000 to $100,000 in your investment. You're just going to make bad decisions then. So that's what is very important as well. You got to gradually build on that. While as if you run a mile before and then you want to run 10, still the same thing, right? You can't just say, okay, well, I've been running 1, now I'm going to do 10. You still need to build on that. And same thing with finance, financial planning, growing your practice as well, getting to your business to a huge level where you get the financial freedom and legacy you want. Baby steps. You can't really do it in a year. You can potentially do it in 5-10 years time frame, and it's consistent habit. Going back to everything we've spoken about, ensuring the front desk receptionists understand your products, ensuring you're training them consistently, ensuring you're not leaving any contracts there and just renewing it without seeing if you can do a better deal. Like all those things build. And as a business owner and as a medical practitioner as well, you get a lot better by the time you do that over time. Someone that has been running the business for 5 years, they would easily and quickly be able to review the contract versus someone who just started.
And talking about that, once you get good at something, sometimes people get stuck, right? Like I was doing good. I put all my money away in my 401k, and then you see the stock market go down and blah, 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 or whatever. And then they just feel stuck. How do you work with them to get unstuck? Because sometimes you can be doing well and then you get a little stagnant for a while. I know that we're almost running out of time, but I think that's important because we get a lot of people who've been doing, they're doing okay, 10, 15 years, 5 years or whatever. And then they hit this plateau and they just can't seem to get to the next level. How do you work with them on that?
Yeah. So one thing we do with people like that is just really, one, we got to communicate how far you've come. Not many people sit down and think, oh, I was there 5 years ago. I'm here now. Amazing. People always think, oh, I'm here now. I want to get somewhere.
Mm-hmm.
So a key thing is you need to always look at how far you've come. And yes, the stock market goes up and down. People, and I educate my clients on this, and I'm just so happy when they're like, hey, Victor, the stock market is going down. Can we buy more? I'm like, amazing. I've done an amazing job. So you almost have to look at things as an opportunity versus seeing the downside. Yes, it's not great when your $1 million investment has gone down to 7 overnight, or rather over a few days. But however, there are different ways to look at that. Can we buy more? Should we restructure? Should we take advantage of that now and, move into a different investment and save some taxes? There's always some opportunity in everything. Okay. But one thing I always get people as well, look at how far you've come, because that $1 million wasn't always $1 million. If we go back 5 years, it might have been $500,000. Okay. So now it's grown, but it's fallen. But let's keep moving, because if you stop or if you feel you can't do anything else, you're going to stay there and stay stuck.
That's right. Well, guys, we are here at the end, and we have been talking to Victor Idoko, and he has been helping us elevate our wealth. And if you go to our school, so go to superclinicproject.com and you go to our free school, we have 2 incredible giveaways. Number 1, he's got a financial literacy course. We're going to have the link for you on there. And then he's going to give a free book to the first 5 requesters. So we will have his email there. So you'll be able to email him directly. But until then, where can people go? Tell us the website that they can go besides our school, Victor.
Yes. So the website you can go to is fvservices.com.au because we're in Australia. And look, we are on all the socials as well. So you can find us on Instagram, you can find us on TikTok, you can find us on LinkedIn as well. And if you just type in my name, Victor Idoko, you'll be able to just find me on either of those socials. On my handle on Instagram is I am Victor Idoko. So that should really come up nice and easy. And yeah, on LinkedIn, we use LinkedIn a lot as well. We post a lot and we share lots of those principles. So LinkedIn is a good channel, as well as our website. We have lots of blogs out there.
And we'll have all that for you on our show notes as well. So if you're driving, it'll be there. It'll be on Apple or Super Clinic Project, you name it, you go there. And guys, be sure if you're listening to like, comment, and share, and give us a 5-star review. That's how we get incredible international financial advisors like Victor onto our show so that they can give everybody some great advice, and so we can all elevate our wealth. Anyway, guys, have a great Super Clinic week, and let's all elevate our wealth. Thank you so much, Victor.
Thanks for having me on.
You've been listening to the Super Clinic Project podcast. If you like what you hear, subscribe and stay tuned for further episodes of the Super Clinic Project podcast.